The real estate market is officially dead. I'll elaborate in a second. Welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Randy Patrick here, putting the realism back into real estate. Today's December the 21st, last video before Christmas. Hope everyone's doing well. It's a busy time of year, and I get that. I've been busy too. Haven't put a video out for quite some time. Just too much on the go, trying to figure things out for the end of the year and for the new stuff we're doing in 2023 and beyond. So really interesting stuff now, guys. So essentially, the real estate market has basically, as they say, frozen, stagnated, died, whatever. Okay, it's just nothing's going on right now. U.S. existing home sales frozen in November, biggest annual drop since the Lehman timeframe in 2008. This is the biggest year-over-year drop since Lehman, the longest streak of sales decline since 1999. So the reason why we're talking about this is because today's the 21st, and NAR, National Association of Realtors, typically releases their previous month's existing home sales data, and they did that today. So that's what we're talking about. That's why we're seeing all these articles about the lack of things that are going on in the real estate business. So basically, look at the chart here. Absent the COVID lockdown collapse, this is the lowest existing home sales SAR since November 2010 at 4.09 million. So basically, sales activity is slowed down. The seasonally adjusted annual rate of sales is completely, hit the bottom. Basically, we're like it was, 12 years ago. This is the actual information produced by NAR, National Association of Realtors. We'll check it out right now. So you can basically see that, our seasonally annual adjusted rate based on sales in November of 2022 was at a 4.09 million run rate. Now, going back up to, January 2021, when they're right in the midst of the pandemic and things are picking up and people are getting right back into the saddle buying things with the whole housing frenzy, we were at a 6.65 SAR. So quite a difference. We were looking at about 2.5 million, a little bit less than that, difference in, what we're talking basically, that was January 2021. So in about 2 years, I mean, it's just a little less than 2 years, we've seen a big drop in overall sales activity. It permeates throughout the industry. Existing home price sales, so they have dropped a bit. So we're actually from a peak of 413,800, which was the median sales price. We're down to about 370,700. So that's been a drop over the past couple of months. Okay, what do we got here now? The change year over year. So believe it or not, the median sales price still did increase from this time last year. Now realize that November and December are very slow months for typical sales based on holidays and climate, weather differences up in the Midwest and the Northeast, etc. A lot of stuff happening in the market these days. So we had a 3.5% year-over-year increase in median sales price, but you can take a look at that chart and you can see that the annual increases are actually decreasing every month as we go forward now. Total existing home sales, again, percent change year over year, 35.4% less home sales this year than November 2021. So the market really is doing nothing. That's more than a third less house sales that happened this month compared to last year. So the market's basically dying as far as I'm concerned. It's dead. Realtor confidence index survey here, slightly more first-time home buyers, a little less sales to investors. Cash sales are up. A little bit more than distressed sales. That's because I think more foreclosures have come onto the market as REO, which means bank-owned, real estate owned. So they were purchased, and obviously our days on market. Days on market is days on the market before a contract is up almost a week, from 18 days to 24 days. So 6 days more, comparatively speaking, year over year. So we see some slowdown, some changes going on. Percent change in sales from a year ago by price range. Well, you can see that every sort of segment in the marketplace, the 0 to 100, all the way broken down to the million plus, has had a, more than 25%, I guess say change in sales the previous year. You can see that the $1 million, anything above $1 million has had the greatest decrease in sales activities. And could that be because of interest rates? Probably. And obviously the next one is the 100 to 250K, which would be your kind of sort of lower end / more affordable housing. So basically every price segment is doing, at least 25% or better, worse, price point better, but worse than they did the previous year's sales activity. Interesting enough here, when you take a look at the supply of homes, so we're up to about 3.5 months worth supply of homes under the seasonally adjusted rate. For those of you who don't know, in real estate, supply of homes is, I guess you could say, calculated or at least illustrated or discussed as in a I guess, metric of time. So what this basically means is when they say there's 3.5 months worth of supply, that means if no new listings came on the market going forward, it would take roughly 3.5 months at the current sales activity pace, to sell all those homes. So that's where we're at, 3.5 months. So you can see we've slowly been increasing our inventory. What's also happening is people are canceling their listings, and they're also waiting, going, I'm not going to put my listing on right now. Why? Well, guess what? I'm going to have it sit there for November or December, have to price adjust, and when people go back out looking maybe in the new year, I'm going to look, I'll have long days on market, etc. So people are choosing not to list their properties, trying to figure out where the market's going. But you can see we're still slowly chipping away at the inventory. It's getting a little bit better every month. Now, with respect to what's a balanced market, well, 6 months, most real estate experts and analysts believe that 6 months of inventory leads to a balanced market. So there's enough buyers and enough sellers. The market should be fairly stable. It doesn't favor one group over the other. That's where we are with respect to that. Now, interesting enough, oh, by the way, guys, if you appreciate the information I provide, if you could hit the subscribe button, thank you very much. All right, moving on here. Something that just came out today, which I just was surprised to see here. So just another little thought to sort of tee off towards the end of the year here. With new mortgages down 47%, U.S. lenders are starting to go bankrupt. Could this one factor trigger the worst surge of failure since 2008? So we really haven't talked about this too much. Now, obviously, what have I been speaking over the past few weeks and months? Well, we've seen home price depreciation, the deceleration of the values going up. We've seen lack of sales, a lot of things going on in the marketplace. And that's all and lack of mortgages, so lack of buying. But we've not really talked about or heard about mortgage companies going bankrupt. We do know that mortgage companies have drastically reduced staffing. A lot of them have done massive layoffs or a reduction of staff here and there. A lot of them have are just maybe hanging on by a thread. There's a few I guess you could say mortgage companies that are going under reorganization, bankruptcy, etc. Some have gone out of business. So we're starting to see that. They're talking more about, in this case, the QM, the non-QM, the non-qualified mortgage group, which, those are like the non-banks. They don't really have the deposits to sort of back them up. And, a lot of stuff are maybe wholesale or warehouse lines they utilize. So, and they sell their mortgages off, etc. So some of these could be in trouble. Is it going to be like the 2007-8 crash when we had countless banks and lenders go belly up and just disappear overnight? Not sure. I don't think that's really going to happen, but we're going to see some casualties. When there's ever a big swing like this, there's always casualties in different elements of industry. So, but again, I just thought that was interesting because I hadn't seen someone talk about that or read about this yet. So, again, now we'll see some of these lenders who are a little more marginalized, possibly, have some issues as time goes on. So, moving on to the housing area, the new home building. Will U.S. building permits collapse in November? Multifamily plans plunge. So essentially, housing starts fell, and forward-looking building permits collapse 11.2% month over month versus a 2.1% expectation. That's the biggest month-over-month drop since the peak of the COVID lockdowns. So essentially, the permits basically are okay. We're going to, get permits from the county or the city that says we can start our build. So obviously, if those are down, that means past sales activity is down as well too. When we take a look at this, again, it says this leaves a total number of housing starts on a seasonally adjusted annual rate at the lowest level since June 2020 for permits. Housing permits are down 22% year over year, the biggest drop since 2009. Single-family permits were down 29.7% year over year, and multifamily 10.7%. So realize that the permits do come as a blended statistic. So that's right. When you see it's only 11% or whatever, maybe that's not that big a deal. But when you actually break the two of them out, hey, almost 30% of single-family homes, the balance, and that's heavily weighted as opposed to the multifamily, which still is down over 10%, but not quite as bad as the single-family. So just please realize that is a rolling statistic there too. So of course, when that happens, what do we see? We see home builder sentiment slumping to decade lows, longest losing streak on record. Basically, the headline index dropped 2 points to 31 after being expected to rise to a 34, but it's still a very long way to fall to match the utter disdain Americans have for buying homes right now. So home builder confidence, which is the green line, has been dropping dramatically. Home buyer confidence, which is the red line, as you can see, has been tanking quite a bit. So University of Michigan is the actual group that does the polling of a lot of people across the country with some of their consumer confidence, and they obviously have a home buyer confidence. So it's been every month, it just keeps getting lower and lower. Obviously, the green is supplied by the National Association of Home Builders, so they're polling all of their builders that respond to their surveys, I guess. So there you go on that. Basically, the National Association of Home Builders is expecting weaker housing conditions to persist in 2023. It's one of those things that, and just in case you want to know, latest survey shows 62% of builders are using incentives like mortgage rate buydowns and paying points for buyers to boost sales, but demand remains subdued. What does this mean for inventories going forward? Well, you know what? From the new home supply, there's a lot going on. Well, not much going on, which means their inventories are increasing. They've got quite a bit here. Now, to put things into perspective, this came from John Burns Consulting. Besides, people not buying homes, well, what else are they doing? They're canceling homes. So if you're under contract for a new home build, people are actually canceling doing that. So whether it's because of price point or rate increases or people getting cold feet, not knowing what the future is going to bring, a lot of cancellation. Now, what we don't know is whether, people are they losing deposits, like what are they getting stuck with, etc. But when you take a look at things, like, you've got some bar graphs here. The orange is from October 21 and the blue is from October 2022. So you can see that the Southwest had 9% cancellations, but 45% this year in October. Texas 12% up to 39%. The Northwest 7% up to 30%. Northern California 11% to 26%. National average is about 8 last year to 26% this year. SoCal 4% to 24%. The Midwest 9 to 21%. Florida 5% cancellation to 20%. The Southeast overall, besides Florida, 6% to 19%. The Northeast 9% to 11%. So Northeast really hasn't seen too much cancellation, and it could be, to me, that could just be the season where people really aren't buying homes at that point in time to cancel, maybe just because of the weather and then how things play out in the Northeast. But interesting enough, you can see that, you got a lot of cancellations going on. So that's hurting the builders all over the place, and I'm wondering how that's actually going to play out. Now, what we'll see, and we are seeing, is increase in builder or new home construction inventory. This chart is courtesy of WillStreet.com, Wolf Richter, and this is a quick chart that's showing the new single-family houses for sale. So if you go to the housing bus number 1, which he has there, which was essentially 2006 and 7 area, you can see that there was an oversupply of new homes. And I remember this because I know that I'd be driving around looking at properties, and we would see people, we would see these builders like Lennar and other ones who were building subdivisions they couldn't sell, and they were closing out, offering big time incentives. A lot of the incentives were to real estate agents to actually purchase those homes, and once they sold out phase 1, they'd bring on phase 2, and they'd actually price phase 2 below what they sold it phase 1 for, so you were already underwater, you see. So that just sort of catapulted the new home construction industry into the housing crisis as well too. But if you take a look at housing bus 2, we're not that far off from where the inventory was in housing bus number 1. So this is the situation. There is an oversupply of new home construction right now. Obviously, they're sitting there wondering what to do with it. We've heard talk about, will they sell to hedge funds and REITs, etc. Well, I guess they possibly could, but those people or those groups want to buy at heavily discounted rates. So who knows whether the builders are going to actually do that or not. It just depends on how desperate they are, what their cash flow situation is. But my point is that we're not too far off from about maybe 200,000 difference. Maybe not quite. Maybe about 100 and sort of 450, 475. So we're maybe about 100,000 difference, a little bit more where we were back now in the last housing crisis. So That's not huge, guys. And I remember if we take a look at the month supply of inventory for the new home stuff, we're talking about 10 to 11 months. So that's well above the 6-month bounce market number. So yeah, we see that there is an oversupply. It's an oversupply not in existing, it's in the new house stuff. And the assumption is that even though they're trying to do incentives and things like that to move these properties, they're probably still priced too high for the average buyer. And again, when rates are over 6%, it probably doesn't make sense for someone to engage unless they're getting, as I said, rate buy downs or massive incentives to move forward. But interesting to note that, when people talk about why we won't have a housing crash or crisis, they say, well, because of inventory. Well, guess what? Here's a section or segment of inventory that's been sitting there for a while, and it continues to grow, and no one's jumping on it. So, to me, that's an oversupply right there, and that could solve some problems. But again, builders are probably handcuffed by what they can sell for, et cetera, et cetera. So it all works out in the end, I suppose. But that's the situation right there. So please keep that in mind. I thought that was very interesting. So anyway, guys, if you want to know what's happening in your neck of the woods with respect to foreclosures, short sales, tax deed sales, whatever, go to gethousingdata.com. That's gethousingdata.com. It's my affiliate link with foreclosure.com. All the things we talk about with distressed properties and foreclosures and short sales and stuff, you can actually look up and see what's happening in your zip code, your county, your city, whatever. So a very handy tool. You can use it to find out what's going on, and it will give you a play-by-play and kind of validate what I've been telling you for the past couple of years. That's what's going on, all right? So check it out. Obviously, I got my new program right now, so if you want to jump in on that, pre-sales with some discount, getting before the masses. I can tell you that the number of inquiries of people that want to get involved with the foreclosure short sale business is starting to increase dramatically. And all the old school people I used to deal with back in the day with other real estate investors I know and other contacts, they're now texting me saying, hey, I want to meet with you in the new year. I want to get going. I want to reconnect and do what we did before. So I can tell you guys, it's going to be busy. People are already planning on moving forward with this kind of business, this foreclosure short sale business. They're already predicting it. We know we're going to have more foreclosures. And as I say, all this talk about home price depreciation, declines in values, all this stuff, it's all based on today's information, which does not include the, we'll call it ambiguous or unknown number of pre-foreclosures, shadow inventory that's kicking out there, and how that will play out in the marketplace, which will certainly accelerate and push us from the correction market we're in to a crash market. All right, so there you go, guys. So please keep that in mind. So anyway, this is last longer video before Christmas. I want everybody to have a Merry Christmas, a Happy New Year. I'll probably do some videos in between Christmas and New Year's. Happy Hanukkah, Festivus, Kwanzaa, whatever you celebrate or subscribe to. Have a safe and joyous season. And again, don't hesitate to contact me. I'll be around doing stuff I got to do because it's getting busier and busier. And we look forward to speaking with you in maybe in a week or so. Okay? Take care.